Welcome to the Knakal News Network. The Knakal News Network is brought to you by the Knakal Group, Cushman & Wakefield's #1 investment sales team in New York City.
I'm going to look at a couple of different sectors. First of all, just Manhattan. I want to go through this again because Manhattan is kind of the bellwether of the marketplace. It's going to be an all-time record in dollar volume, second best year ever in terms of number of buildings sold. Dollar volume down slightly, but that's because of the retail properties that have sold. This is the first chart that you should look at and say, what the heck is going on? Because that's what we did. We look at this, and this 1640 is explained by the combination of retail properties that are in this Manhattan price per square foot. But from here in the fourth quarter of 14 down to the third quarter of 15, it's 3 quarters in a row where average price per square foot has dropped in Manhattan. It's the first time that's happened in 19 quarters. That's a concern. Core Manhattan cap rates, again, Manhattan cap rates down below 4%. They're compressing, but they're compressing at a slower rate than they have been in the past. And if we look at cap rates quarterly, we see again 2 quarters where cap rates in Manhattan have risen. Also the first time that's happened in 19 quarters. In terms of Manhattan core cap rates, everything is under 4%. Again, elevated apartment buildings doing the best at 3.62, and office product under 4%, which is remarkable in itself. Development sites, this is an area where we are seeing some concern, particularly in secondary and tertiary locations. We just look at the number of development sites sold, almost on an identical pace to last year. Still a lot of bullishness, particularly early in the year. Manhattan development sites, just about the same as last year. Dollar volume way up. The sites that are selling are more expensive. So the dollar volume will hit an all-time record of $10.4 billion this year if it stays on pace. Dollar volume in Manhattan alone, $6.9 billion. That will set a record for the city. And then development sites price per square foot citywide, $285. In Manhattan, $650 average. And if you look at the outer boroughs, see the averages in the high 1s to low 2s for Bronx, Brooklyn, and northern Manhattan. And then the Bronx, which is mostly driven by affordable housing, down at $47. The office building sector, office buildings doing a little better than last year. We'll have about 212 sales this year if the market stays on pace. About $28.5 billion of sales activity. We've already had a higher dollar volume of sales through the first 3 quarters this year than we had all of last year. And cap rates on office, you see citywide, down at 4.78. Now again, you look at this and say 2014, over 5, so down, up, down. This was caused in 2014 by an inordinate amount of office buildings that sold in the Queens market. So this impacts price per square foot, cap rates. If you look at price per square foot, you'll see the same dynamic where 2014 it was down a little bit citywide. And in Manhattan, on about the same pace relative to office buildings as last year. Dollar volume will be way up. That has to do with the type of properties that are selling and increased values. And then if you look at Manhattan office product, where we are again, now in Manhattan, we had in 2013, there were a number of office buildings that sold with very significant retail components. And the retail components within an office building can change the value dramatically, just as that retail component changes land value dramatically. If you're in a great retail area, that can have a significant impact on the value of the property. All right, 2013, why was value so high? And if you look at the mix of office buildings that sold in Manhattan in 2013, a number of them had very significant retail components. Those buildings have been condoed with 1 office condo and 1 retail condo. Retail condo has been sold. Weren't that many of those buildings that sold in 2014, but this year you see our average price per square foot over $1,200. First time that has happened. If you look at vacancy rates, citywide for Manhattan, we're about 8.9%. Best market in terms of vacancy is Midtown South, which is under 6. Downtown is a little bit higher, but on average, about 8.9%. And if you look at average rents, you see that in both Midtown South and downtown, we are at all-time high levels, all-time highs. Downtown, almost $58 a foot, $67 in Midtown South, Midtown has grown very nicely, but still not quite where it was at the peak in 2007. This is an inventory over time of how much product is expected to come to market. We expect that the supply of office will go from about 400 million feet to about 415 million feet, with 15 million more feet coming online. A lot of the Hudson Yards and World Trade Center is baked into these numbers over time. But you can see the stock will be growing, but new product is desperately needed in the city. Too much of our office stock is far too old. Retail buildings, see again, they're performing well, a little bit better than last year in terms of pace. In Manhattan, retail is on about the same pace as last year for numbers sold, but we see that the dollar volume for retail is on pace to be about half what it was. And again, retail can be skewed so much by the price per square foot. If you typical retail property selling for $2,000 a foot will impact the statistics very differently than a property that sells at $30,000 a square foot. So the dollar volume has been very mixed. In terms of cap rates down to about 5.01% so far this year. That is through 3 quarters. And in the city, you look at retail cap rates, you see high to low, northern Manhattan. And you look at this chart, and normally the lines are very smooth. These are very erratic, and it has to do with the nature of the type of retail properties that are sold. So these statistics are very, very fuzzy, very volatile, but all performing relatively well. New York City retail, we're at about $851 a foot, down from last year, again having to do with mix. You look at Manhattan, this tremendous difference in value. If you didn't have this up here, you're looking at a very smooth upward movement within the retail sector, but Manhattan retail averaging over $2,000 a foot today, and these are the averages for the outer boroughs.